The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Boland, and I am the aggressive growth stock strategist. And I'm back with two more stocks for your aggressive growth radar screen. And this one, we're going to do a little retail version here. You know, they say retail is dead and Amazon's eating everybody's lunch, but we're going to find out that that's not necessarily totally true. We're going to start with Burlington Stores, and it's BURL as the ticker. It's a Zacks rank number one, and that's a strong buy with an A for growth, as just about all of these aggressive growth videos have. And don't call it Burlington Coat Factory because it's more than just coats. There's all sorts of fashion and apparel there. But let's take a look at why this is a Zacks rank number one. First of all, we've got a great history of beating the number here. Here's a meet, but 3 out of the last 4 are beats with the average surprise at 8.6%. I'll get rid of that so you can see it. And then we take a look at estimates. Moving the right way here, the wrong way here, the right way here, and then the right way here too. So we're seeing maybe a little switch around of numbers here because this happens to be the 8 cents. This could be a pull forward situation where I'm pulling this 8 cents forward into this quarter, and then next quarter they're coming down. But at the end of the day, what's more important is the full year numbers. And I see some good growth there, and that's why the stock is a Zacks rank number one. If we take a look at the valuation, always important. 10% top line growth. That's for starters. That's pretty good. The forward earnings at 28 times is a little bit rich. The price to book is pretty rich, but again, this is going to be an asset slim business because they're going to be doing a lot of turnover or their inventory turns. And we can see that, that very number, as it's moving higher, that's a better thing. So the higher that number moves, the better. I'm seeing net margins coming in a little bit over the last couple quarters. Operating margin holding pretty much still. I mean, you're just a little bit there. And then price to sales at just about 2 times. So the market values all of their incremental sales. Let's take a look at the chart, and now you're going to really like this. When the rubber meets the road, it's the stock price. That's what really matters here when we're doing these things. And we can see over the last few years, we've been told that retail's dead. But boy, oh boy, just that's the support move right there, the support line, if you will. And that takes the stock from $60 to $200 over a long period of time, over 3 years. But, when we've been hearing retail's dead and we keep on seeing these gaps in between these colored lines, it tells me earnings continue to grow. And when I see that, that supports the idea of this stock continuing to move higher. So can this stock go from 200 to 300? Absolutely it can. And, I don't want it'd be difficult to just kind of, back of the envelope here, guess on the estimates and the numbers and everything. But if estimates keep moving higher, this stock could go to that big $300 level. All right, let's go ahead. What's next for retail here? We can see that it's a Boot Barn Holdings, and that's BOOT is the ticker. It's a Zacks rank number one. This one is a B for growth and a C for value, and it snuck in there as a B because these are both retail names, and I'm going to stick with the idea that these are I'm going with just retail here today. All right, so let's jump ahead and take a look at why this is a Zacks rank number one. And as we normally do, we take a look at the earnings history. Big beats here: 18, 33, 52%, and a meet. That kind of skews the average lower, but it's still a big number over the last 4 quarters, 26%. If we look at estimates, moving up. This is a tick down. But the Zacks rank is only going to look at the last 60 days. So it's going to see holding still as opposed to that ticking lower. And then it's going to look at this just a little tick higher, and this is holding still. So estimates moving higher, just in the more recent time frame here. Let's take a look at the valuation. kind of in the line here with what we talked about here for the Burlington store. So 22 times forward numbers. Price to book's much better here. And then price to sales 1.3%. They're looking at 14% top line growth. So it is growing. Their turns numbers obviously is a lot lower. And their net margin just a little bit lower than the 6 we saw there, but moving the right way in operating margin there. So let's go ahead and take a look at, where the rubber meets the road on the Boot Barn. And you can see that this one has really turned it on here in the last year and a half. Stock was a candidate for stocks under 10. I passed on it. And boy, I wish I didn't. Whoa, what an ugly line. Yeah, so it just keeps on moving up, and we like that. And like the last one, Burlington, we can see a good gap in between the colored lines here, and that tells me that earnings estimates are moving higher. A little bit of a stall out here in that thesis, but you can see over the last year, that's why this stock has continuously moved up. All stocks took a beating in this quarter here, so I want to get past that. And if we think about it, where it's only a little bit above that level as we are back into the fourth quarter of 2020. All right, well, that's it for this week. Be sure to join us next time as we take a look at 2 more stocks for your aggressive growth radar screen.